Your house is lying to you. On paper, it's an asset. In reality, it might be your most expensive liability. Today, we break down the top 10 reasons buying a home may cost you more than investing in stocks, and what actually builds wealth. Your house is a consumption trap. You don't just buy a home. You pay for the roof, taxes, insurance, repairs, and furniture. Every month, money leaves your account. Unlike stocks, it doesn't put money back in. Banks love your house, not you. To a banker, your house is an asset because they can sell it if you default. To you, it's a liability until it produces cash flow. Forced savings is not free money. Sure, your mortgage builds equity over time, but most of your early payments go to interest, not your own pocket. The first 15 years, you're renting from the bank, not investing in wealth. Opportunity cost is massive. That $80,000 down payment could be invested in an index fund. Over 30 years, disciplined investing often beats the return on home equity, especially when you account for maintenance and taxes. Inflation hedge advantage. A house locks in your housing cost. Rent keeps rising, but your fixed mortgage is stable. This is a real benefit, especially in high inflation environments, but it's a shield, not a growth engine. Liquidity matters. Stocks can be sold in minutes. Your home. Selling takes months, costs thousands, and you can't sell a room to cover emergencies. Being house rich but cash poor is real danger. Imputed rent counts. Living in your own home saves you rent. Think of it as a tax-free dividend. It adds value, but it's not liquid wealth you can use freely. The 5% rule. Quick math. Multiply home price by 5%. Divide by 12 equals monthly unrecoverable cost. If you can rent for less, renting and investing the difference beats buying. Short-term moves hurt. Buying and selling in under 10 years usually loses money due to fees, closing costs, and front-loaded interest. Only stay put if you're ready for the long game. Stocks versus real estate returns. Over 30 years, the S&P 500 historically grows 7% after inflation. Real estate? Closer to 3 to 4%. Liquidity plus compounding equals renter often wins, if disciplined. But balance is key. A home provides stability, stocks provide growth. So, is your house an asset or a liability? The answer depends on your budget, your discipline, and your plan. Treat it as a place to live, not a lottery ticket. Invest in stocks for growth, own a home for stability, and you win both ways. Hit like, subscribe to Top 10 Orbit, and make smarter money choices in 2026.